U.S. office market. Comeback. What's driving the return to cities? For years, the American downtown looked like a ghost of its former self. After the pandemic, remote work took over. Companies gave up their leases, and commercial real estate, once the heartbeat of urban economies, was left in free fall. But something unexpected is happening in 2025. The U.S. office market is coming back. Major cities like New York, Dallas, and Miami are reporting record leasing activity, and vacancy rates are starting to fall for the first time in years. Manhattan just logged its strongest quarter for office demand since 2019. The question is, why now? What's driving this urban comeback? And is it here to stay? Let's break it down. The first big driver is corporate rebalancing. After years of experimenting with hybrid work, many executives have decided that the in-office model still matters, especially for innovation, culture, and client relationships. Companies like JP Morgan, Meta, and Deloitte have been leading this shift, requiring employees to spend at least 3 to 4 days a week in the office. That return has triggered a wave of new leasing across premium business districts. In New York, financial and legal firms are upgrading to high-end spaces with better amenities, not necessarily taking more space, but taking better space. In real estate terms, this is called the flight to quality. Companies want buildings with smart systems, health certifications, and flexible layouts that blend collaboration zones with quiet work pods. And landlords are adapting fast. Instead of traditional cubicle-heavy offices, we're seeing workspaces that look more like hospitality venues. Think lounges, cafes, gyms, even rooftop terraces. The modern office isn't just a place to work. It's an experience designed to attract employees who now expect more than a desk and a break room. The second factor is AI and automation. Yes, artificial intelligence is changing how businesses operate, but it's also influencing where they operate. Many firms deploying AI tools are finding that collaboration between tech teams, data scientists, and executives works far better in person. Large-scale AI projects require cross-department brainstorming, creative problem-solving, and secure environments for data handling, all of which are easier to manage in centralized offices. At the same time, AI is being used to make buildings themselves smarter. Property managers are deploying AI to optimize energy use, manage air quality, track maintenance, and even predict space demand. That's making modern office towers more efficient and sustainable, cutting operating costs while improving tenant experience. The third driver? Urban transformation. Cities have learned hard lessons since 2020. Many local governments are actively redesigning downtowns to make them more livable and attractive for workers. You're seeing new zoning policies that allow office-to-residential conversions, tax incentives for commercial renovation, and investments in public spaces that make returning to the city feel worthwhile again. New York, for instance, is converting aging Class B office towers into mixed-use developments, part apartments, part co-working hubs, part retail. Los Angeles and Chicago are following suit. This blend of commercial and residential life is breathing new energy into neighborhoods that were once strictly business districts. And let's not forget one of the biggest catalysts: interest rates. For years, high interest rates have frozen commercial real estate investment. Developers couldn't finance new projects, and buyers stayed on the sidelines. But now, with the Federal Reserve signaling possible rate cuts later this year, investors are jumping back in. If borrowing costs fall, refinancing becomes easier, valuations stabilize, and new deals start flowing again. That anticipation alone is already lifting market sentiment. Private equity firms, pension funds, and real estate investment trusts are quietly returning to the table. They're betting that the worst of the commercial downturn is over and that a new cycle of urban growth is about to begin. But let's be clear, not every city is recovering equally. Markets like Austin, Miami, and Nashville, which saw big post-pandemic population inflows, are thriving. Meanwhile, San Francisco and Seattle are still struggling with tech layoffs and downtown vacancies. The difference often comes down to diversification. Cities that blend finance, tech, healthcare, and education tend to recover faster than those dependent on one dominant sector. There's also a generational angle. Younger workers, especially Gen Z professionals, are showing a surprising preference for office-based work, not necessarily full-time, but as part of a balanced routine. Surveys show that many feel isolated working remotely and crave mentorship, networking, and the social energy of the workplace. For them, the office isn't a cage. It's a platform for career growth. Another force behind the rebound is international capital. Global investors, particularly from Asia and the Middle East, are once again targeting U.S. commercial real estate as a safe haven. With China's economy slowing and Europe facing stagnation, the U.S. market looks stable and attractive, especially if interest rates drop. That inflow of foreign investment is adding fresh liquidity to the urban recovery story. So, is this comeback sustainable? Or just a short-term bounce? It depends on three things: how the Fed manages rates, how flexible companies remain about hybrid work, and how well cities adapt to modern urban realities. If rates fall too fast and inflation reignites, financing costs could spike again. If companies backtrack on their office policies, vacancy rates could stall. And if cities fail to make downtown life attractive, workers might drift back to suburban co-working spots. Still, the broader trend is clear. The death of the office was overstated. What's happening now is a transformation, not a return to the past. Offices are no longer one-size-fits-all. They're evolving into hubs of creativity, collaboration, and community. The U.S. office market's comeback isn't just about filling space. It's about redefining what that space means in a new era of work. Jamie Dimon said earlier this year that great cities never die, they reinvent. And that's exactly what's happening. From New York's high-rise conversions to Dallas's booming, downtown to Miami's corporate migration wave, America's cities are proving resilient once again. The urban office isn't disappearing. It's being reborn, smarter, greener, and more human than before. And as long as ambition, innovation, and connection remain part of the American business DNA, there will always be a reason for people to gather, create, and build together in the heart of the city.